So hey guys, welcome back to Onefinnet Network, Elevate Private Equity training today on private equity careers. Like I said, we're really excited to welcome. I'll give a quick, I think we have, like I said, 400 people that we're expecting. 80% of you all are incoming investment banking, consulting, or private equity professionals. And so we're really excited to kind of train the next gen of you guys into your careers and your career journey. We have over 30 universities represented. So really great to welcome people across, incoming a lot of different firms and funds, as well as a lot of undergrad. Quickly, for anyone I haven't met on campus, Kaushik Ravi here, founder here at One Financial Network, also experienced, private equity professional and banking professional, started my career off at Goldman. Quick background, I've worked on over $200 billion of buy-side, sell-side throughout my career across Goldman, both IB and PE. In addition to all of this, I also founded One Financial Network, which is a platform here. We've trained over 100,000 professionals and students in MBA since 2021. We've built a best-in-class exec search kind of hiring platform, a training platform, a coaching platform now, a networking platform, an investment platform. So really expansive in all this, and we'll really be working with you guys throughout your careers. So quick background here, like I said, hiring. We work with about 700 billion AUM of funds on this platform. We have a networking, a training, and investment platform. More to come on that. On the hiring side, guys, as you all know, people in the audience, we are going to be hosting a lot of firms over the next few weeks. Networking events, especially for anyone in New York. I think we'll have a professional private equity networking event in either May or June, and then one in July for all of our incoming, and summers and so on. We've also launched, actually, in the last few months, this coaching platform. So anyone who's recruiting and wants one-on-one sort of coaching, we have coaches from pretty much all the mega funds and a lot of middle market funds. So if you're looking for recruiting guidance in a more one-on-one capacity, obviously feel free to reach out to our team. Then we have a networking platform. Then upcoming events, just a couple to point out. In addition to the Warburg one, which I pointed out last week at our Citadel event, we also have the HIG and TA event. So we'll share that here. And then also on campus, right? Well, I'll be speaking at probably 20 universities in the next few weeks, and a lot of our schools 2 or 3 times. So definitely, if you attend any of these schools and are a senior or junior, this week we're at NYU, Columbia, Harvard, I think Berkeley, Penn, etc. So definitely check all that stuff out. So anyway, lots of stuff going on, guys. Check your emails. So without further ado, guys, I would love to introduce our panelists today. We have a ton of stuff to cover. So we've gone on in no particular order. I just see the order on my screen. I've got Shreya, Devin, Greg, Seemal on as well. Particularly excited about this panel because I've known all these panelists for a long time. They're all amazing individuals, amazing mentors, and frankly amazing leaders in the private equity space already, right? You can really be a leader regardless of what level you're in, and I think I really think very, very highly of all of our panelists, but especially our panelists here, and many of them, right? I met when people in the audience, right, when you were in college or when you're sort of or starting out your career. So I'm doubly excited about that. Which just means that everyone in the audience, right? I expect you guys to be on panels in the next, next couple of years. So without further ado, guys, we do have about 20 slides. We'll be going through a bunch of kind of the process side and the whole framework here. But before we jump into that, I would love for our panelists to just give a quick intro. I'll just start with Shreya since she's the first one I see.
Of course. Well, glad to be here. Hi, everyone. Thank you for joining on a Sunday. I'm Shreya. I'm currently at Apollo in private equity. We're generalists. I cover across industries, but spend 50% of my time in consumer. Before that, or before 2 years, I was at JP Morgan in investment banking in media and communications group in New York. And as Kaushik mentioned, I think we met when I was in Chicago, a junior, or I guess like sophomore year. So it's been a long time, and it's been great to be through Elevate, I guess, and Onefinnet now through many different stages of using it, getting guidance to now, I guess, potentially being on a panel, which has been really exciting. But yeah, thank you for joining.
Thank you, Shreya. I'll let you do a little pitch for Apollo in a little bit. But I think, Seemal, do you want to go next?
Happy to. So I'm currently an associate at Francisco Partners. I'm based out of the London office. Been here for almost a year now. Was at JP Morgan in San Francisco for 3 years doing tech M&A prior to that. Also met Kaushik through Chicago. Shreya and I were friends, so we all go way back. And met him, I think, my sophomore year or junior year as part of one of the PE or banking boot camps that he hosted. So thank you all for joining us on a Sunday.
Amazing. Thank you, Seemal, also joining us Sunday evening in London. Devin, do you want to go next?
Hey everyone, I'm Devin. I'm currently a second-year associate at Advent on our tech team, doing both buyout and minority investments. And before that, I'm also located in New York now. Before that, I was at Morgan Stanley's tech banking group out in Menlo Park, where I focused on software and internet companies, and graduated from Princeton in 2021. Really excited to be here.
Amazing. Thank you, Devin. And last but not least, Greg, do you want to give us your background?
Yeah, hey everyone. I did my undergrad at Cornell, where I studied public policy. I then worked at Bank of America in the fintech team for 2 years, and then spent 3.5 years as an associate at Veritas Capital, and am currently now a Wharton student, and getting my MBA. So I have a lot more free time than the others on the panel, but I've been involved in the Onefinnet platform / Elevate platform for I think almost 4 years now, and got involved back before I was in private equity. Got connected through a mutual connection, and have done panels, have received training sessions, have hosted training sessions, and also have really enjoyed the live events that have been hosted in New York City.
Thanks, Greg. Awesome. Thank you all so much. In the context of the topics we're going to cover later today, right? Industry, stage, strategy, all of that. I would love if everyone can just spend a minute on what your respective firms do, and a little bit just an overview, right, of the different types of strategies and maybe the types of candidates or professionals who might like that environment, right?
Yeah, of course. I guess like Apollo has gotten so much more different since I joined the firm, but now we're an alternative asset manager. So we do like pretty much across the capital structure a lot of solutions, whether that's private credit, which I guess is like something that's grown a lot over the last couple of years. But private equity was obviously the start of how Apollo kind of started in 1990s, and that's kind of still the foundation. In addition to that, we obviously have other arms, like including secondaries and other products that we're exploring all the time through our CPS group. But I guess situated in private equity, I can say for a fact that when we work on deals, it's not just us kind of sourcing and executing them. It's always kind of looking at it from an Apollo platform generally, in terms of like, if we're passing on it from an equity standpoint, can we pass it on to hybrid value to look at it from a preferred standpoint, or can we pass it on to the credit team to look at it from a debt capital structure standpoint? So I think it's definitely from a platform perspective, it's grown really at a really large scale, and we're no longer kind of sourcing opportunities only for the private equity or private credit of the world. It's codependent in that sense.
Seemal, do you want to do a little bit of a quick pitch for Francisco Partners?
Yeah, definitely. So FP is a technology only investing firm. We started in the 1999, so about 25 years now. Headquartered in San Francisco, we have about 50 billion in AUM. So historically, the strategy was only equity. Our credit fundraise is a much smaller piece of the overall business. It's 3 billion, but growing. So within equity, we have two funds. We have our main fund, which the latest fund was 17 billion, and we have a smaller agility fund, which is about 4 billion. So we invest exclusively in technology companies. That's what we've always done. Historically, we specialized in carve-outs, and that was kind of our right to win and entry into the industry, but have since kind of focused on later stage buyout and also growth investments with the goal of ultimately owning a majority stake in the business. And to echo Shreya's point, we do also have the mandate where we're sourcing exclusively for the equity investments, sourcing exclusively out of the equity team. But if for whatever reason an investment's not fit for equity, we can pass it on to credit if it makes sense. So that's kind of the investment mandate and platform.
Amazing. Thank you, Seemal. Devin, a little bit of an overview of the fund.
Yeah, so Advent has about 90 billion in AUM. We're headquartered in Boston, but have offices really all over the globe. We are only focused on private equity, and we invest across 5 different sectors. Those are business, financial services, industrials, consumer, healthcare, tech, and I think those are all 5. Yeah, but anyways, I sit on our Advent tech team. Even though we have 5 sectors, we all invest out of the same global private equity fund. What's a little bit unique about our team and sort of our fund is that because we have this sort of sidecar tech fund, we're able to do sort of a flexible set of investments. So we can look at minority investments as well, and there are definitely a lot of cross-sector deals that we do too. But we are focused on long-term growth investing. We were spun out of TA Associates back in the 1980s. So we are definitely much more operational and we focus on growth.
Thanks, Devin. Thanks for that. And Greg, just you can do your Veritas pitch.
Sure. Yeah, so Veritas is roughly $45 billion AUM private equity fund. We specialize at what we call the intersection of government and technology, which is investing in government and government influenced markets that ends up including healthcare technology, education technology, fintech, and the broader aerospace and defense universe. At the associate level, everyone's a generalist. So it was great experience. And we're generalists not just across industries, but also across business strategies. So whether it's a manufacturing business, a tech-enabled services business, or a just independent software platform, we're agnostic as long as it's the right opportunity. The private equity funds are primarily two funds. It's a $10.5 billion flagship fund and a $2 billion middle market fund. Associates invest across both, so you're able to see a really wide variety in deals that you look at. And ultimately, the associate experience there is very hands-on. Given its late stage buyout, you're going to be obviously doing a lot of modeling work, but you'll also get a large amount of operational experience since we do get very involved in the operations and value creation strategies of our portfolio companies.
Amazing. Thank you, team, for walking us through that. It's really top of mind for obviously all of our candidates thinking about strategies and industries. So we'll go through all this stuff in a little bit. Before we jump into recruiting, which is, guys, everyone in the audience, recruiting for private equity and sort of careers is going to be about 90% of the session today. But before we jump into that, I would love to get our panelists' perspectives right on the day-to-day. The reason why I want to start here is because before you try to convince us that you want to work every day in PE, I think it's helpful to know what do we actually do and sort of, what are the skill sets that are really important. So Seemal, I'll start with you. Maybe you can talk about, right, what does the PE firms do overall on both the investing and operating side?
Yeah, definitely. So I guess just to, on a high level, situate private equity in the land of private investing. So there's venture capital, there's growth, and then there's PE. Venture capital is more early stage investing. So when companies are typically earlier on in their life cycle, often even pre-revenue, trying to find product market fit. Then comes growth investing, when companies have typically found product market fit and the thesis is to grow the business and scale it. There on out. Private equity in the traditional sense is more later stage investing. So you're typically acquiring majority control stakes in businesses with the goal of improving them, either financially, operationally, or growing the business and scaling it in other geographies. So that's the thesis. In terms of the business model, private equity firms will raise money from limited partners or LPs and then seek to deploy the raised money into businesses by acquiring majority stakes. The hold period for our acquisitions typically tend to be 5 years. And the goal is to create value over the course of that 5 years. So that's either through strategic M&A, through operationalizing the team, to professionalizing the management team, the functional heads, just bringing in more, I'd say, a higher tier of discipline within the company. So that typically tends to be the thesis on that. And in terms of operational, so I'd say most private equity firms are not, the investment team members are financial investors as opposed to operators. And when we meet management, we acknowledge that we're never going to know their business and their industry as well as they do, and that's not our job. But there's different levels. So I think like Bain Capital and Advent, as Devin mentioned too, would tend to be a little bit more operationally focused. What we do as members of the investment team at FP in terms of operations is, whether that's in our quarterly board meetings or ad hoc meetings, we'll tend to debate with the company, strategize on what makes sense in terms of product portfolio, if there's interesting acquisition targets that they could help roll up as part of the business. So that tends to be our operational involvement. But also at FP, we have a separate operational team, what we call Francisco Partners Consulting, which is our ex-operators, C-level, as well as functional heads of other public and private companies that tend to help out our portfolio companies as needed. So that's kind of the operational involvement. And just to round out, in terms of the private equity business model, after holding it for 5 years, hopefully growing the business, we tend to exit either through strategic or through another financial sponsor or an IPO. Those tend to be the typical paths to exit. Perfect. That's a high level overview for private equity.
Amazing job. I mean, I gave you a tough job in 2 minutes to talk about the entire industry. So, well done. So Shreya, let's shift to the next question here, which is quickly touch on, then as Seemal talked about, a high level, but slightly more hands-on. What does the day-to-day look like, across, your job and sort of the senior associate job?
Yeah, of course. I think, well, from an associate's perspective, I do think like it's the cliched answer of like it depends. But I think if you were to kind of do a weighted average of 3 months or like a quarter of your time, it's throughout a year, it's mostly spent across portfolio companies and new investments, is how I would phrase it. Mostly all the associates and even partners and senior people in the deal team all have like portfolio companies that they cover. For example, for me, I have 2 portfolio companies that are consumer and retail focused, and those are roughly 40 to 80% of my time, depending on, again, like what cycle of the investment you're looking at. If it's something that you just recently closed, there's going to be a 100-day plan and you're trying to get a lot of things done and set in place with the new management. So that's going to be a busier time for you. And then on a normal standpoint, it's usually 40 to 50% time in portfolio company, and the rest is usually new investments, which I guess for us as Apollo, it's very generalist. So we cover across every industries. I've spent most of my time in TMT, business services, and industrials, but that really does vary and change based on whatever's in the pipeline and you get staffed on, essentially. And that's also a way that you get to kind of work on with new teams and explore different principals and partners that work in the team and cover more specialized industries. From a perspective of, I guess, like in general, what the work day-to-day looks like, I think it's, for a portfolio company, it's kind of a wild card. I think it really does vary times like what analysis you're working on and whether that's just like modeling for what the next management 5-year plan is going to look like, or whether that's like board meeting follow-ups. It's very random. It's almost equivalent to like you own the assets, so you have to kind of weather through all the issues that are coming across the company, whether that's from a company standpoint or that's from an industry standpoint. I think on a new investment, we kind of stage it in 3 different ways. So one is you're looking at something from a desktop, outside in only work, which is pre-NDA. You don't have any angle of getting in through the management board yet, but you're trying to develop some sort of a thesis on Apollo, saying that this is something that looks interesting to us, and then you approach management. In those cases, we kind of prepare this thing called a one-pager, which is unfortunately not a one-page by any means, but it is like an industry overview of like 10 to 30 pages of what we think is our angle of approaching it. And if something becomes interesting, then you kind of track it for a while until that opportunity catalyzes. The other 2 stages are mostly like when you're a little bit advanced, where there's a process. And the third part of it is like when something is really accelerated and it's gone through round 1 and round 2, and you're almost about to execution on a deal, in which case it becomes kind of a portfolio company at the end of the day. But I think the work really does vary. It's just a combination of what you're spending your time on.
Amazing. Again, great job. I think that's exactly right. You're doing, some level of sourcing industry work ahead of the deal, a lot of the work on the deal, right? Getting the diligence done, effectively doing all the work, and then post deal, as Seemal and Shreya mentioned, kind of depending on the company, how much work you have to do. So now, with that in mind, guys, let's shift over to a little bit of on the kind of careers and recruiting side. So I'll give a quick overview and then we'll dive into this process here, right? So generally, kind of think of there's kind of 10 main steps of private equity recruiting. Obviously there's the preparation phase, which I think, a lot of you guys are in or will be in soon, deciding sort of what are your target firms and also all the prep stuff, which we'll talk about. Then there's an element of networking, which we'll get to a little bit later. Depending on when you're recruiting, whether it's on cycle or off cycle, there's different, value to networking and kind of how do you do that. Then you have sort of intro calls, right, with recruitment firms or, HR firms. Obviously, like I mentioned, we have our own recruitment firm, but, depending on, there's also other larger funds out there, in terms of headhunters, and those are the ones you'll be having calls with. Then you have, these days, a lot of breakfast info sessions with the firms, right? They invite a section, select group of folks, like maybe 30, 40 people to a breakfast, and then make a list, based on that. Then it's called round 0, which is effectively screening calls, right? Or coffee chats with associates. So, like the Shreya, Devin, Greg, Seemals of the world, right? You'll be having coffee chats with initially, that could be another screening phase, right? Then you'll have more of the formal process. So round 1, you'll meet with a senior associate or a couple of VPs, and then really walk through your background, why you want to do PE, a lot of the behavioral stuff, which we'll cover in sort of the next few slides here. Then typically round 2, you do like a modeling test, could be 2-3 hours. They give you sort of a 1 PDF and then have you build basically a quick LBO model. Then round 3 is usually a walkthrough of your deal. So probably 45 minutes to an hour of deals or projects on your experience. And then round 4 is usually like a case study type. And then later on, you're kind of meeting with more senior people. So with that in mind, guys, I'm just giving you a little bit of a, way to kind of think about this. Then I think just a few considerations. I'll comment on this and I'll get the team to comment a little bit on it. there's a lot of timing considerations that goes into private equity recruiting these days. You know, and as we see this on the recruiting side as well as on the candidate side, right? So there's this concept called on-cycle recruiting and this concept called off-cycle recruiting. And both of those words have kind of diminishing value these days. So, but on-cycle just means the first wave of recruiting that might happen. It's kind of, you know, advance the timelines very, you know, very, in very short order. The things I want you to really keep in mind if you're going through this process, especially for private equity, growth equity, venture capital, to an extent with hedge funds, preparation, right? Make sure we're really prepared and don't enter the process before you think you're ready, right? So that's the first thing, whether it's to, you know, search funds or it's for, or search firms or with the funds. Number two, really have clarity. I don't want our audience or any of our bankers or consultants to feel like they made the wrong decision, like buyer's remorse, et cetera. So make sure you have clarity into like, what are the types of funds and strategies you want to do? Because effectively, right, you're signing up for this for the next 4 to 5 years, right? Number three, when are your preferred firms recruiting? Like I said earlier, not everyone, you know, previously 3 years ago when on-cycle all happened, you know, at the same time, everyone kind of went at the same time. That's not happening these days, right? So when are your firms going? Number four, how well can you speak about your project and deals? If you're recruiting in July, you'll probably be talking about your summer experience, right? So be mindful of that. If you're going off cycle, make sure you can decide if you can balance your workload, right? With recruiting, which might be 2-3 hours a day for a couple of weeks. Make sure you have time for reverse diligence. Have you had time to evaluate culture? Have you spoken to at least 3 or 4 people outside of your interviewers, right? It's really important. Like I said, you are effectively like signing up for this for the next 3-4 years, right? And then finally, not just modeling. I think everyone here just goes and does a modeling thing and then forgets that the interview is like 80% of behavioral and other stuff, right? So just, these are my consideration. Anyone on the panel want to comment on timing and any of these points, guys, that based on your experience and your advice? I try to cover it in the interest of time, like pretty succinctly here, but others can feel free to comment based on your own experiences or things that our candidates should watch out for as they go through this process.
Yeah, I would say on the on-cycle versus off-cycle decision, there is, you know, it's not a requirement to on-cycle as a first year. You can skip on-cycle as your first year and do it as a second year. I actually personally did that way back in 2019, not to date myself, but it's hard to know whether you're ready or not. So I definitely suggest reaching out to, connecting with current private equity associates, especially if you have an existing relationship, trying to schedule a mock interview to assess whether you are ready to do it or not. You really only get one shot with each firm. And so, you know, if you interview with FP and as a first year and you don't get the offer, it's unlikely that you'll then be able to re-interview with them if you do on-cycle as a second year. So you really should make sure that you're ready before doing the process. I personally thought I was ready. I did one on-cycle interview as a first year, realized I was not ready, and elected to wait and spend some time prepping, networking, and try again as a second year. It was definitely the right decision for me.
Great points. Others on this topic? Great point.
Yeah, maybe
Yeah,
just adding.
Go ahead.
Seemal, you go.
No, I was just saying, I'd say the other consideration, because I went through both off-cycle recruiting as a first year and then decided to do on-cycle as a second year. I'd say the other one, definitely know if you're prepared or not. Two, also with headhunters, it can sometimes be a limiting factor. If you absolutely bomb an interview, there's chances that the headhunter won't refer you to other kind of top clients. So that's another thing to be mindful of. And three is the time you get to make a decision. So I landed FP through the on-cycle recruiting process, and it was a 5-hour process, start to finish. Got the offer within an hour and had 3 hours to decide whether or not I wanted it. So just, it ends up being a very fast timeline, and you really don't have, like, if you do participate on cycle, it's going to be a quick timeline and you won't have much time to decide. So just something to be mindful of.
Yeah, Devin.
Yeah, just really echoing preparation. I think it could really be to your advantage or disadvantage. And I think that takes a lot of self-awareness as well to what everybody else is saying. You know, first impressions matter a lot. So if you feel that this is exactly what you want to do and you've done the work to really make sure you're prepared, that will completely shine through. And you can definitely leverage the great resources that Kaushik has. But at the same time, you know, I think there's also something valuable in spending a little bit more time thinking through what you actually want to do in your next role. I think a lot of these jobs have very similar components. So, try to spend some time thinking, what do you like? What do you not like about any of the roles that you're working on? Ultimately, I think the best advice I've received is try to maximize what you do enjoy doing.
Yeah, great points, guys. I think two things that both Greg and Seemal mentioned, which and Devin mentioned. Number one, when I say on cycle, there's kind of the first year wave and then a second wave. Like to Seemal's point, right? The first year wave, firms might only fill up % of their classes, and then they'll come back the second year and want to fill up with second year analysts. And that's what these guys are talking about. A lot of our firms are doing that because it's really hard to evaluate candidates like before they've started their banking jobs. And the other fact, the vast majority of recruiting ended up happening off cycle in the last couple cycles. So just something to be aware of. Thank you guys. I think the next area I wanted to really cover is there's a lot of stuff on this slide. I'm going to quickly summarize and I have all our panelists talk one by one on this, right? So your decision framework, Seemal alluded to this, Devin alluded to this, Greg alluded to this, and Shreya alluded to this. You have to have a framework for making a decision for the types of firms you want to go after and all of that. So I try to break it down into sort of 6 or 7 areas: public or private, stages of investing, size of transactions, emphasis on the role, right? What you're working on, industry focus, as well as geography. So let's start going through this and maybe a couple minutes on each, guys. Devin, can you start us off with the considerations of private versus public?
Yeah, happy to talk about that. For context, Advent also has sort of its own internal hedge fund, but private equity is our core. But privates and publics investing is really just two sides of the same coin. Ultimately, the difference is you're investing in private companies versus public companies. But the nature of the work is really as similar as it is different, I would say. For privates, to what everybody's been saying, you're really owning, but more importantly, you're operating. You're owning and operating. Shreya really mentioned, focus. A lot of your time is spent focused on new deals and portfolio management, and can not underscore that enough. But the nature of that work is you're really focused on diligence, execution, and portfolio management. Like on the diligence side, you're getting internal company data, which I'm sure all of us can sort of speak to, the various states in which that can exist. But you're really sifting through, you're organizing, and then you're distilling that down to ultimately the key needle movers in your investment thesis. Then in your execution, you're focused on deal sprints. That's sort of maybe part of the nature of the job, in that there are processes that last a certain amount of time. It's very common that we may receive an inbound from a bank, or we have a proprietary deal, and they say, hey, we have a 4-week process. Submit your bid by the end of the 4 weeks. And it can be very fast paced, but it's also a very predictable one too. You generally have a sense of the various deliverables that you need to do to get to the finish line. And then portfolio management, like that's also not one to underestimate. Like once again, you're not only an owner, but you're also an operator. So once you put all these fancy words on a page in your IC deck, at the end of the day, you have to carry through on those, right? So that's a very important part. Now, on the public side, you're not necessarily an owner, or you're not necessarily an operator, unless maybe you're thinking of like a shareholder activism angle. But you're really digesting public information, you're pouring through filings, research, and also marrying that with proprietary research too. These are things like channel checks, data science, like credit card data, app data usage, manufacturing data, everything that you can use to basically create your own proprietary data that you can make decisions off of. You're also really tracking public companies, like especially if you're doing this long term. Many of the people at the top, they've worked with these management teams for maybe even decades. They know how they think, they know how they behave, they know how they run businesses. And a lot of that also goes into the job too. And ultimately, you're investing maybe on shorter term investment horizons. It really varies. There's a whole spectrum. I would say there's a lot of firms that generally invest in 1 to 3 year investment horizons, but that can be shorter. It can be quarterly. But at the end of the day, you're getting like a report card literally on a second by second basis. And that's when you're seeing, is your investment thesis still true or not? And then adapting to that. So ultimately, you're doing a lot of the same research, but the components of the underlying thesis, which is what makes the investment exciting, may differ slightly between the two.
Totally. Thank you, Devin. Look, we had a Citadel session last week, and we covered a lot of the public stuff, so you can reference that for people that have questions on that. But exactly like Devin said, but one of the questions you'll get in the interview is, okay, you're sitting here for PE, but you were in the investment club in college, or you were this. So why are you interested in private versus public? Why not go hedge fund? And so that's kind of use everything Devin just talked about in terms of structuring your answers for that. Thank you, Devin. Greg, can you touch on these different stages? I know we've covered this, but just high level, a minute or so. What are the different stages and maybe what could be some similarities, differences in recruiting processes and answers for these?
Yeah, definitely. I would say across, earliest stage being venture capital, latest stage being private equity, late stage buyout, and growth being somewhere in between. The essentially to some extent, 30 to 50% of the jobs across these are going to be the same. You're going to be evaluating companies and building an investment thesis, but what you're ultimately building to is very different. So venture capital, you're investing much more in visions, in founders, in changing landscapes, in disruption. Private equity, you're investing much more on a track record. You're looking at what has the company done over the last 5, 10, 15, 100 years sometimes. It involves a lot more of scraping through data, of financial modeling and analysis versus venture, which is more kind of TAM, building a vision, understanding the market. And then growth tends to be somewhere in between, although different growth strategies can be a lot more buyout heavy or and taking majority ownership, or can be a lot more venture-like, can even invest in venture-backed companies and do later stage seed rounds. And so really can vary in between. Also, because of that, the degree of sourcing that you do at the junior level tends to be much heavier on the venture side, where in some cases it can even be the majority of what you spend your time on. Whereas in private equity, especially when you get to larger cap private equity, almost every deal you're going to look at is going to be through a banker-led process, given the scale of these companies. And so the associates are not going to be doing the sourcing. The associates are going to be spending much more of their time on the portfolio management and new deal evaluation that we talked about earlier.
Perfect. Thank you, Greg. As far as interview process, exactly like Greg said, some of the small differences, you'll still get LBO modeling, you'll still get case interviews, you'll still get all that stuff. On the growth side, you might get a little more like customer cohort analysis, right? And sort of things like that. So just something to be aware of. If you're interested, you can do the growth training and stuff that we have, but I think just generally that's some of the differences there. Seemal, can you touch the large versus mid cap? You've covered some of this already, but any differences that candidates should think about? Upper middle market, or is it just generally the same process, kind of the same sort of everything?
Yeah, I'd say I think from an associate skill set standpoint, it's probably not going to be too different, regardless of whether you're at a large cap or a mid market or solid upper middle market PE firms. You're still going to be doing similar diligence. You're still going to be learning the same skill set in terms of investment frameworks and how to think about deals. I'd say one, you're just going to be working on larger transactions if you're working at a large cap PE fund. It's going to be organizationally just a bit more structured, which means that there's set ways in terms of how they do things. Smaller firms will afford you the opportunity to get more creative, to take on more responsibility, to step above your current role and show that you're prepared for the next one. So I think there is more room and flexibility in that sense. But as you think about your careers, and if you've done you went to a target school, you've done 2 years of banking at a good group, you want to do 2 years of private equity, then move on to either public markets investing or go on to business school, let's say. And if that's kind of the path that you want to follow, I'd say sticking with the large cap, more well-recognized PE firms is probably a better way to think about it. So it just kind of depends on what your career goals are.
Yeah, great point. I think on the size, it generally is they're kind of very similar across the board. I would say, if you're solving for certain things, right, you want to, a lot of the large cap programs are becoming another 2 and out programs, guys. So if you kind of think about going to a large cap and then having to kind of re-recruit again, that's another sort of potential question mark. I would often see with my upper middle market firms, people gender promote internally and a good, kind of there's that track as well. So something to think about there. There's a question that came in about private credit. We are going to be hosting like a model. It's like a private credit interview session in the next, I forgot to put it on the list, but it's coming up in a little bit. So let's save the private credit for that. But generally, guys, a lot of this stuff here will apply, but depending on, where you're applying for private credit, you might get sort of a slightly different type of kind of modeling test and so on. Okay, and then I think, Seemal, one other thing on industry geography, how much clarity do you need to know? Like, hey, I want everyone here says, there's some version of a generalist program and then you get allotted later, but maybe comment on how much you need to know ahead of time on, I want to go into tech or I want to go into this, or is there some room to kind of, massage that message?
Yeah, I think if you go to a headhunter's office and you're like, well, I am okay with any group and I'm okay with any location, they're probably not going to receive that well. It'll just show that you really don't know what you want to do. So I'd say having a couple non-negotiables. For me, for example, it was that I wanted to do tech investing, period, and I knew I wanted to do tech late stage investing. I was more flexible on location. So I think having a couple, it's a little bit of a give and take, right? Especially if you're optimizing for kind of the best offer and you're not that tied to, in my case, I wasn't that specific about location. I was open to location as long as I landed a tech late stage investing role. So I think about what your industry interests are. Are you truly passionate about an industry, or do you want to be industry agnostic and you're okay with the generalist program, but you want to be in Boston, for example? So I think it just really depends on what your career goals are, what your personal life goals are, and then triangulating from there.
Yeah, it's a great point. Let's actually, that segues nicely into sort of the interview side of the world. So we're going to cover like background, kind of YPE, behaviorals, all of this. But I think, like I mentioned earlier, kind of that round zero, you do get outreach and inbounds from headhunters, and also you have those conversations. So Devin, do you want to just give a quick background on how those conversations go? What should you be ready to answer? What types of questions are you going to get? Any sort of curveball questions and so on? And just maybe give us an overview of that.
Yeah, sure. So headhunters are ultimately focused on three things. They're focused on, do you know what you want to do? Why? And then ultimately, you want them to walk away from that conversation feeling confident that they could put you in front of one of their clients, one of the funds that you're interested in. What that entails then is that there's typically, the questions that one might expect, things like, tell me about yourself, what sector are you interested in, what tech, what strategy, where would you like to be? But ultimately, they're going to try to dive deeper, right? They're focused on why you are saying the things that you're saying. They're trying to understand why you made the decisions that you did. Talk about why you decided to go to the school that you did, why you decided to major in the school that you did, major in the major that you did. Anything along those lines. They're just trying to understand, is this somebody who is just doing this for maybe like misguided external reasons, versus is this someone who is going to be a really strong candidate or a strong analyst or associate? So make sure that you have answers to those. In addition to sort of the opposite, right? Like if you say you want to do private equity at a mega fund, they're going to ask you, well, why don't you want to do growth? Why don't you want to do VC? Why don't you want to do publics? Those are all things that, are part of the why you want to do what you say you want to, but those are also important. I think in terms of curveballs, there's not as many that at least I encountered. Any of the other panelists can chime in. But ultimately, they're just focused on, is this somebody that is professional? They know what they want to do. They're able to communicate that efficiently, and will be able to perform well in an interview. I would say the main tip, and maybe things have changed as things get earlier and earlier, but this is generally a very quick process, especially for on-cycle. I think that for on-cycle, when headhunters reach out, that's typically the clearest sign that the process is going to start much sooner than you think. I've heard some headhunters have started reaching out to some folks in undergrad in their senior year now, which is very early. But for context, when I was going through my on-cycle process, our headhunters reached out to us on a Thursday. Some people were caught a little off guard. So they decided, you know what, I'm going to schedule meetings for the following Friday. The process basically kicked off that Tuesday, and those who didn't speak with the headhunters on time ultimately were not necessarily top of the list to pass on. So that's very important. It's completely in your advantage, once again, to be prepared and to be ready to go at a moment's notice.
Yeah, great points all around. Greg, I want to shift to now the behavioral side. So maybe you can walk the group through just what are we expecting. So the just to give preview, we're going to do behaviorals. We're going to touch on technicals. We're going to do Behavioral, what I consider behavioral is also this kind of like your background and all of those questions. And then we're going to do how to talk about a deal, and then we're going to do some case studies. So that's just there's maybe 4 topics left in today's sort of session here, but these are probably the meatiest of the topics. So Greg, I would love for you to start off with kind of those behavioral, kind of the personal story questions, which is kind of round 1, which is what is your background, why UG, you know, why PE, and all of that.
Yeah, definitely. So I think for a lot of those behavioral questions, what the interviewers are just trying to get a sense of is, do you really understand what you're getting yourself into? Do you know what you're signing up for? And do you is this something that you're genuinely interested in and or passionate about? Because if it's a job that you're not really passionate about, it's very hard to do well in, especially because as a private equity associate, you're given a lot of responsibility very quickly and very early on. And so a lot of the key there is just making sure that in your answers, you are able to answer that question in your interviewer's mind. So saying, you know, banking's great. I like a lot of things about banking, but I don't like that the deal processes are only 3 to 6 months at a time. And then we move on and we never speak to the management team again. And when we're on a sell side, PE, once the deal's done, you're just getting started. You're now engaging on a 5 to 7 year pathway with the management team. Completely different story. Can also be things like, you know, I think operating is really interesting and I want it to be a component of my job, and it's the financial analysis is great, but I want that to be supplemented with operating. Some examples of those things. And then generally also you want to make sure that when you talk about your background, you're telling a story that has clear points and it doesn't just sound like you're following the herd, right? You did an internship before banking, something about that led you to become interested in banking, you're trying banking, something about banking is missing that you feel like PE is going to provide, as opposed to just, I did these things because everyone else was doing it and I thought it would be a great way to get the best job.
Yeah, great points. Greg's point, and Devin made the point earlier too, make sure you can talk us through the why. A lot of our candidates just say, oh, I went to Cornell, or I went to Chicago, or I went to Stanford, and then I studied this, and I interned here. And then I'm like, well, why'd you go work for a VC fund as a junior before you came here? Oh, I'm interested in sort of the technology side. Okay, cool. Like, help us connect the dots. And even if it's a very traditional background, right? You know, undergrad, junior year, summer, senior year, summer. You know, why'd you start a company in college? Like, why did you get involved in these funds? Like, you know, there's a lot of the why of the things that you do, not just the what, which is what people, you know, effectively, want to get to know. So thank you, Greg. I think great job. Shreya, like, let's quickly hit on, before we go through kind of the deal walkthrough and stuff, if you don't mind, I will come back to behaviorals in a second, but Shreya, do you want to kind of quickly hit on the types of technical interviews? This is kind of what I call round 2, right? So round 1 is your background, what Greg said, why you're interested in PE, why this fund, etc. Round 2 is effectively like a modeling component. So would love if you could walk through this.
Can you guys hear me? Okay. Yeah, so I think it really does vary based on, again, like on cycle versus off cycle, and definitely the fund, but I think also primarily based on which one you're participating in. So I would say from an on cycle standpoint, since that's what I participated in myself, it usually is a 1-page LBO, and that again is like dependent on kind of like a luck draw of like who you get as an interviewer out of the 10 people or so that you'll talk to from the investment team. But I would expect, like, I would definitely be prepared for a 1-page LBO. And I know that some of the headhunters would also do a 1-page LBO before they kind of forward you to first round interviews with these funds. And the next step, or like the major step, is just like the 1-hour model case study, which is like a 3-statement financial modeling, and building an LBO, along with, if I guess things are getting a bit more intense in terms of like the fund that you're interviewing for, they might attach a case study to it wherein you have to kind of have some sort of assumptions or some sort of backing into why you think the income statement or the P&L should flow a certain way. However, there's obviously an easier version of it, which is like they'll give you assumptions and you just kind of have to build and piece together a model in almost like a mathematical format versus kind of thinking about it or proving thesis to it. And I think when you probably have a 3-statement model and not necessarily a case study attached to it, those are going to be 2 separate components. in your interview, regardless of whether it's an on-cycle or an off-cycle. I think the major reason for them being separate or even intertwined is one of the key aspects. I think Greg might have mentioned it or somebody else is they're really looking to see why you want, like, can you even think as an investor? And one of the like big questions that Apollo, for example, asks like almost everyone who interviews, like, how does this business make money? I think the biggest component that gets lost being in banking or in an advisory role is like you're churning through so much deal activity that you don't really get as much time to think about what the company really does. How are they making money? How do we, as an investor, can we capitalize on it or not? And I think that's one question that I think in some shape or form, everyone's going to ask you. So from a technical standpoint, I think it's going to be a big portion of like how you build your LBO assumptions. And I think if you now take it to the other end of the spectrum, that if you're doing an off cycle, I've seen people get like 2-day case studies or week-long case studies, which are exactly the same thing as what we just talked about, but you're going to have to take a much more nuanced stand on like what the industry is trending at, what are your P&L assumptions, why do you think your model looks a certain way, and you might also have like some form of a short presentation attached to it or not. Again, there's very much a lot of fluidity in terms of like what the fund is really looking for and what stage you're kind of interviewing them with, but there will definitely be a technical component that involves at least a 3-statement modeling with an LBO and some shape or form of a case.
Yep. Amazing. Thank you, Shreya. That's exactly right. I think preparation, right? You just knowing how to build an LBO to start off with. There's a ton of resources both on our platform and off the platform. But this is something you can obviously figure out. But I think the hardest stuff to prepare for is like the business side, right? Like how do you think about a business and how do you talk about this, which is actually what we're going to transition to now. Before I do that, I'll just quickly touch on behaviorals, guys. Like I said, just like an IB interview, the technicals are like 1/5 of the whole thing, right? So one of the things that headhunters will ask you, right? Let's say you're going through on cycle your second year or even your first year. They'll say, hey, what was some feedback your staffer gave you last summer and how have you like worked on it? Like what was the what did they say was your strengths or weaknesses, right? And so really being able to have stories and thought out answers that you can mock with people and actually get good insight on, really, really important. So some of the questions that you might get in behaviorals, right? Strengths, weaknesses, teamwork experiences, feedback, leadership, conflict, conviction, right? When did you have to convince someone of something that you really strongly believed in? This is a very important question for private equity. You would have never seen this question in IB because there's no concept of like, of sort of, there's low sort of opportunities to show this at the junior stage. And questions like that. So I really want to emphasize the importance of this because a lot of times you may never get to a modeling round if you don't really do some of this behavioral and some of these other things really well. I think I want to spend a minute or two or a few minutes on project walkthrough or kind of company walkthrough, right? So the reason why we're going to touch this section here is like Shreya mentioned already, there's a few different variations of this, but this will come up in every single process. So some version of pick a deal you worked on last summer and let's walk through that. Fine. If you don't have a deal, let's pick a pitch you worked on or some IPO or anything that you sort of were even part of. Or if you don't have that, let's pick a company you just generally or an industry or transaction you generally saw in the market and let's talk about that. Let's pick a transaction that Warburg or FP or Apollo or Veritas has worked on and then let's go through that. So or let's pick a company that you generally like and let's go through that. So there is literally every variation of this model that could come up, or a hypothetical company. Hypothetically, let's say we are buying a logistics manufacturer, right? Right. So I think this is a probably the most common. I call it case. We call it deal. So we're gonna go through a little bit of the framework now. You should all apply it in whichever way it makes sense. If it's about your deal, then you're going to be asked about deal framework. Oh, who was in the process? Like what was the multiple? If it's a hypothetical, then we'll focus on business model. But generally, we'll cover kind of 5 topics here. And a little bit of an ad lib here, guys. I didn't give you this assignment ahead of time, but if we can just maybe go one by one. Greg, I will start with you on kind of the project or overview of the transaction. Like let's say you worked on an IPO over the summer or an M&A process last summer or your first couple months on the job. Maybe just comment on strategic rationale, industry trends, comps landscape, and how our candidates should position these answers.
Yeah, definitely. So the strategic rationale is really it is going to depend a little bit on whether it's a buy side or a sell side. But essentially, what you want to make sure is you can explain here's the overview of the company that we worked with, if it's a sell side, or our client and the target, if it's a buy side. Here's the rationale for why they launched a sale process, right? Because no company just throws, caution to the wind and says, let's just try to sell ourselves. Were they undervalued in the market? Were there recent challenges? Was there a management team turnover? Was there an activist investor? Things like that. Or if you're on the buy side, is our client trying to break into a new industry, geography, something along those lines, and really explain, what's driving, what's the catalyst for this overall process, and then on top of that, being able to speak to, for, let's say it's a sell side, we primarily targeted strategic buyers because of XYZ, or we primarily targeted sponsors, or we ran a broad process because Y, right? And not just knowing that you ran the broad process, but what was the company's thinking, or what was the rationale for doing so? And then vice versa on the buy side, what was your client's catalyst or rationale? Was it proprietary and they reached out because they're really trying to do this and they thought this was the best target to do so? Or did the client get an inbound from a bank and now they're trying to evaluate whether they want to do a deal at all? And if so, is this the right deal to do? And then otherwise, once you've gone through that, it's generally being able to speak to, high level. The flow should be kind of, here's the target company or client, here's reason for launching the process, quick overview of what the process looked like. Here was the general trends of the company and process. And then lastly, here's what I did on the deal. And that should be kind of the succinct walkthrough to kick it off.
Perfect. Thanks, Ray. Well, Seemal, I'll go to you next. Seemal, if you can walk through the next step here, like talk about a little bit of, when we ask you things like, okay, what was the valuation? What is the comps trading at? What is relative? So what are you expected to know when you talk about these deals? And sort of, how do you position sort of some of the transaction metrics?
Yeah, I think especially when you're talking to private equity firms or any investing firm, I de-emphasize almost the dynamics piece. That's just more process driven. So like mention how many, if you were on the sell side, mention how many strategics or sponsors were in the mix. What were kind of the considerations there? How did you position it? If there were multiple bids, how did you position it to one versus the other? But I'd focus a little bit more on the business model and the valuation. Do you think it was a fair valuation? Yes or no, based on what comps, based on what kind of fundamental business metrics. I think a couple of things that perhaps maybe might come later or are in here. So one, how does the business make money? What is its moat? Is it sustainable? So I think those are, so I think the revenue model, how do you see the company in the context of the overall industry? What is its rights to win? That would bring in questions about competitive dynamics. Is it a leader? Is it number one, number two, number three in kind of its industry niche? I'd say in terms of financial metrics, I try to remember on a rounded numbers basis, the last 3 to 5 years of revenue numbers, the growth CAGRs, gross margins, OPEX margins, and or EBITDA margins, and the kind of rough OPEX split between R&D, G&A, and S&M. What are levers where you think the business is not optimized, where the business could be doing better, and what is the conversion ultimately into free cash flow from EBITDA? So I think those are the high level numbers that I try to remember for the deal that you're walking through on a rounded basis. But that's about it.
That's perfect, Seemal. Great job. And then Greg touched on this, and we have kind of the slide on here as well. What was your role in the deal, right? Everyone will ask you, right? What did you do? Obviously, over the summer, you wouldn't have done everything, but just say, hey, I was in charge of kind of managing the buyer outreach. I was in charge of X, Y, and Z. But it's really important, guys, whether it's process points, whether it's financial analysis, process execution, or client management, make sure you kind of position it in a way where actually it speaks to your strengths and your work style, right? Hey, it was a complex model, but I really wanted to, in the 6 to 8 weeks I was on the deal, I wanted to get involved, and so I took on this segment of the modeling, right? It's kind of the operational model roll up, or hey, it was a high profile deal, but I was fortunate to get the role to sort of manage the buyer list and so on. So give them a preview into like a selling point of yourself. through the things that you've done, right? Versus saying, oh, I did the modeling, be like, hey, this is the context and this is what I did on that deal. And then final thing that I'll just touch on that Greg and Seemal have alluded to, the way to put it all together is, okay, well, tell us now that you've walked us through the business. Is this an interesting business? Why or why not? We've talked about this at the beginning of the session here today. Kind of, investment strengths, risk mitigants, all of that, and kind of build off of that. So that's just a deal walkthrough, guys. I think we have. Greg, I think the last thing I want you to touch on maybe is just the investor mindset, like how we evaluate that. Obviously, we do that in the deal walkthrough. We do it in other parts of the interview, but maybe you can just quickly touch on case/investor mindset questions on how those are measured, and then we'll sort of end the session with some key pieces of advice from our panelists.
Yeah, definitely. The way that questions can be framed changes a lot. Like a great common question is, what's the best business you've ever seen? A similar question that's looking for the same thing is, would you rather invest in a manufacturing business or a services business? And then they provide no further information and expect you to ask the follow-up questions about to then ask and try to understand the qualities of each of those businesses that you find attractive. Ultimately, the goal of these questions is the same. And by the way, it's the same as, would you invest in the deal that you worked on? They're just trying to get an understanding of what are the types of qualities that you look for in a business that you want to own. And a lot of that can typically comes down to industry dynamics. Is it a growing industry? What's their position in the industry? Comes down to competitive advantages. Do they have network effects? Do they have economies of scale? What is kind of their right to win? Why have they been winning, and are they going to expect to continue winning? And there's no right answer. I'll add one caveat, which is when I was interviewing, I always said MasterCard was the best business I've ever seen. I was interviewing someone and they said Visa, and I didn't care what they said. That was the right answer. But unless that crazy coincidence happens where it's either the direct competitor or the company that you personally think is the best business, it doesn't matter what your answer is. What matters is that you defend it and you're able to speak to essentially, what do you look for in an investment and what makes an attractive investment to you?
Great. Well, super, guys. I think we try to cover in about an hour plus, a lot of different topics. We're going to have a ton of follow-up events, guys, with these firms. I guess a few Q&A. How in depth are incoming analysts expected to know about the deal? Seemal, do you want to answer that question? In terms of if you're just coming in from like a summer experience, right?
Yeah, definitely. So I think I try to know the metrics of the business, at least the financials. That's especially as an associate at a private equity firm, you're expected to be the keeper of the truth when it comes to numbers. So financials, I just try to know cold. To have a view on the business, have I'd say a 101 level understanding of what the business does. What shouldn't happen is if it's a public name and your interviewer knows more about the business than you did, especially for a business that you worked on. So learn that, and then a little bit around process and whether you think it was valued fairly, did it trade for a fair price or not. So I'd say those are kind of, and a little bit of that you can also just learn from doing outside and work, right? If you didn't gather those metrics over time or when you were doing the internship. So those are some things that I just kind of know off the top of my head.
Oops. Yeah, totally, Seemal. Great job. I think we had a couple more questions come in but there are a couple other questions. Are PE firms expecting you to reveal the companies involved in deal walkthrough? Greg, how would you deal with kind of MNP? Obviously, the answer is no. Please don't share anything that's supposed to be private. But Greg, how do you suggest candidates walk through questions on like live deals or confidential deals?
Yeah, I mean, you don't have to say the name of the company, but you should still. And I would say, especially if it's a public deal, it's PE interviewers are not trying to make you uncomfortable. They're not going to say, "Tell me which company this was." You can speak to and describe a company without giving the name of the company, right? It's the largest revenue cycle management provider in the United States, focusing on ambulatory services, right? That could be a number of companies, and it'd be you're not giving away any MNPI by saying that, by describing that. So you're expected to still be answer and speak to the questions that we're describing and being able to explain and walk through a business clearly. You don't need to name the specific company in order to do so. And if there are specific aspects of the company that really would be a dead giveaway, then maybe it's a little bit, you can be a little bit more cautious with sharing those. But generally speaking, you should be able to speak to and answer these questions without breaking MNPI.
Agree with that. I think a couple things. One is definitely don't share anything, especially if it's a live deal, because there's way too much that you may not know about. Like that firm might be looking at the same asset, like they might know your MD on that deal, or if you say something and they then with a bunch of follow-up questions realize that it's an MNPI, then I think it's a bigger issue. I mean, there's MNPI issues, but also there's your own candidacy sort of reputational issues as well, right? So make sure that you try not to over impress people by sharing things that you're not supposed to, obviously. The other thing is, look, if you absolutely can't share anything about the deal because it's like pre-IPO and it's pricing in the next 2 days or something, then don't talk about that deal. Say, hey, like this is literally, we're going live in the next 48 hours or 2 weeks. Like, would you mind if I picked a different deal or process, right? So again, obviously use your judgment as you go through this this process here. A few other questions. Does investment banking ranking prestige play? Look, I think to an extent, yes. Which is why I think a lot of the work, you guys need to spend some time thinking through what are the most realistic / what are the most sort of aspirational places you can go. And there's some work going, involved in that. I would say like seeing the results. I mean, I'll plug our coaching platform, right? Seeing that we've placed pretty much into every fund that's, out there and on a host of different sort of backgrounds. So I'd say you should be aspirational. But also be uber prepared and react to the market and realize sometimes maybe it takes one step before getting to the next place. You may need to lateral to a bigger bank to get a mega fund offer, right? Or you may need to go here to go do that. Or you can go to a middle market fund and then go there, right? So I think there's some reality check alongside with being aspirational. I've seen people do amazing things and they've just crushed the networking game, or they've crushed the sort of interview game, and they've sort of, really stood out. I think there's ways to do that. I definitely don't want to preclude anyone from doing that, but yes, I think generally, right, it helps to go to a slightly higher ranked school or a higher ranked bank, and sort of that is what it is. Okay, I think those are sort of the majority of the questions. Panelists, I guess if we can just have you end with just any advice on any of these topics, such as, how do you maximize your banking or consulting analyst experience? Maybe what are the keys to getting promoted or getting good reviews, in the banks and, the programs that you're in, understanding that all of our audience is going to spend 2 to 3 years in IB or PE or, consulting before they go into PE. And then just keys to finding things you can be great at in your career. I've always said that's the key to success in careers, right? How do you really take an introspective approach? So you can pick any of those topics, and would love sort of some of the parting words of wisdom from our panelists. Seemal, why don't you start, and then we'll go to Greg.
Yeah, definitely. So I think your banking analyst years are objectively probably the worst years of your life in terms of a work-life balance perspective. You're going to be working 80 to 100 hours a week, and you're really just not going to want to be doing anything else related to work outside of that. So I think one, get through it. So like that's just the biggest and the most brave part. And two, in terms of making the most of the experience, I'd say fine. So in banking, you're typically like your MD or your VP will tell you what needs to be done, and you just kind of turn the comments, put together the analysis, and send it out. When you have the chance, when you have the downtime, take a minute to just kind of reflect on the company and the deal that you're working on. Would you invest in the business? Do you fundamentally understand what the company does? Two, in terms of finding things you're good at, I'd say try to figure out, do the numbers excite you? Do you like, what do you want? Do you really enjoy doing the models? So do you maybe want to work on a later stage company, a later stage investing strategy where a lot of it is the financial analysis and getting the model right? Two, do you really, or perhaps you really enjoy interacting with management teams and you really enjoy engaging with people and the EQ part of the job? That could probably signal that you'd be better at an earlier stage venture capital role. So I'd say little understand what you're interested in, two, what you're good at, and then try to marry the two in terms of as you figure out what the next step could be for you. So I think that would probably be my biggest piece of advice.
Yeah, great advice. Greg, do you want to give us your thoughts?
Yeah, that definitely echo everything that Seemal said. I would say overall, number one thing is attitude. Just stay positive. Appreciate, that yes, you're going to be working 80 to 100-hour weeks very frequently, if not all the time, but you're learning a ton. You're being given a great opportunity, and make sure to take advantage of it and appreciate it. I would say like the biggest difference between or the easiest way to stand out positively is just always maintain a positive attitude, especially in banking. Two, I would just say take on responsibility where you can. Don't be afraid to, pursue quote unquote step up opportunities. In terms of finding out what you're good at, you're not going to find out if you're good at it or not if you don't try it. So don't be afraid to try new things. Ask the person above you to let them allow you to take on a little more responsibility when you think you're ready for it. And then lastly, I just think ask for feedback. People, you're going to get reviews, mid-year reviews and year-end reviews, but you should be asking for feedback in between that. And a lot of people are going to be more than happy to share, what you're doing well and where they think you can improve. But most people aren't just going to offer it up to you. Don't be afraid to ask your associate out for coffee after a deal ends and say, hey, that was really intense. I enjoyed working with you. Would love to hear what you think I did well and what you think I can improve on. I did that on the first couple deals I worked on, and all of the areas to improve on that they gave me were super helpful feedback. And by the time year-end reviews came back, none of those were negatives anymore because I had been, had the 6 months to work on them and improve them over that time.
That is amazing advice, guys. I think it's always exciting when we do these events with all these professionals, and this is amazing advice. I do completely agree with everything Seemal said about finding things you're interested in. And Greg's advice here on feedback. I think I want to just quickly share. We do have another free sort of platform here. You can go to the Academy. You can really get advice from thousands of videos that we have on just any questions that you might have about, private equity, venture capital, growth, basically like, any firms that we've had on or speakers. So to what Greg's point here and Seemal's point is like, don't try to learn from people who've already done this. So you're kind of, learn from them and get best practices. But other than that, guys, I know we're over here. I want to thank our panelists. I do want to thank, all their busy schedules, all of our panelists, especially the ones we've had today, really devoting their time and energy on, building this platform out, as also in kind of building the next generation. I think we're really excited, and hopefully you'll get to all the panelists, the audience can meet some of the panelists in either London or New York when we host these sessions. But yeah, other than that, good luck everyone here. And other than that, thank you, Seemal, Greg, Devin, and Shreya, obviously, for being a part of this, and look forward to seeing everyone soon. Thanks all. Thanks, guys. Great job.
Thanks, Kaushik.